Hello everyone and welcome to the first lecture of second unit, shares and dividend. So in this first lecture of second unit, we are going to see what do we mean by share, types of shares, face value, market value, few examples. Then we will see what do we mean by dividend, what type of profits we get in investing in shares. So let's begin our first lecture on unit 2. In fact, I think I'm going to finish this unit 2 in this lecture only. So this first and last lecture of unit 2. So let's start. What do we mean by the by word share? To start a business or a company, we need money or funds or capital. You can arrange the capital by your own or from banks as a loan, or approach to SEBI to ask them to allow people invest in your business or company. When people, when common people buy or invest in your company, shares comes into the role. So here I have an example explaining what do I mean by share in terms of rupees or figures. Suppose you need 80,000 rupees for establishment of small scale business. In order to raise this fund, you have decided to collect. Instead of collecting, I'll say that you have decided that people will invest rupees 20, a very small amount, from common people who are interested in your company. So rupees 20. So these are the small contribution made by the people to generate this 80,000 rupees. Or I can say that I can divide this big amount, 80,000 rupees, into small pieces, and each piece will cost rupees 20 to the people. So 80,000 will be divided into 4,000 pieces, or I will say that it's a unit. So there are 4,000 units, and one unit will cost rupees 20. So 4,000 units of total capital, 80,000, and one unit will be of rupees 20. So you have made 4,000 units of capital needed. These units are called shares of the company. So I think this gives a clear idea. What do I mean by share? A share is a part of capital needed to raise the company. So these shares or units are like ownership of that company. If I invest in some company, or I buy some share of some company, I will be a owner of that company according to the number of shares I am holding. Okay, so initially here, cost of one share, which is decided by you as a owner, initially is called original value, initial value, or face value. So in the beginning of my business or my company, I've decided that my unit will cost rupees 20, and I have decided that it will be for rupees 20. So that rupees 20 is called face value, initial value. Note, usually face value is rupees 10. Sorry. Now let's define share in a proper manner. A share is referred to as a unit of ownership which represents an equal proportion of a company's capital. I think this definition is explaining very well what I have said earlier. So people who purchase or invest in these shares are called shareholders. A share entitles the shareholder to an equal claim on profit and loss of the company. So it's a proportionate ownership. Whether if company is in profit, you are also in profit according to the number of shares you are holding. If company is in loss, you will also be in loss according to the number of shares. Next is where you can buy or invest in shares of a company. Companies are deciding their face value after deciding their face value of one share and total number of shares. They register their name in stock exchange, share market or share market. You can purchase shares online or offline in share market. In return, you will get certificate of purchase mentioning your name, amount invested, number of shares purchased, face value of shares, and etc. That's how you become a shareholder of that company. What is face value and market value? So we have already defined what do we mean by face value. Still, let's see what do we mean by face value. It is the original cost of a share listed on the certificate. Face value, it is not calculated, it is decided. It is determined when shares are issued by the company depending on the capital the company wishes to raise. Excuse me. So normally face value is kept rupees 10. Rupees 10, or in some theoretical questions it is we also take rupees 100, rupees 10 and 100. But in real share market, rupees 10 is the face value. What do we mean by market value? Calculated by dividing the company's worth by number of shares it has issued. Market value of a share is a price at which shares are traded. Traded means buying and selling is done in the share market. So market value of a share changes throughout the day. Market value MV can be greater than face value, lesser than face value, or equal to face value. So this is the mathematical expressions for three statements. We also compare market value with book value. So what do we mean by book value? Book value is calculated by dividing the actual value of company. Actual value means total assets owned by the company minus removing the liabilities, that is the actual value of the company, and divide that actual value by number of shares outstanding in share market. So book value is this. So this is the example of some shares. So these are the shares and these are the face values, book value and market value. So the shares of Reliance Industry, face value it's normally rupees 10, book value is 706 rupees 0.45 paisa, and one share in market today on this date is rupees 1903 rupees and 35 paisa. Yes Bank, what happens to Yes Bank? The face value is rupees 2, book value is 17 rupees, and the market value is 23 rupees 50 paisa. That's very less. We all know why, what happened to Yes Bank in recently, what's going on in Yes Bank. So, and what about United Breweries, the Vijay Mallya company? Face value is rupee 1. Book value is 133 rupees and 5 paisa, and one share in market cost will cost you rupees 1009. Bharat Petroleum. You can see all these details on internet. I think this is I have taken these reading on 13th July. Now, what do we mean by at profit? Shares at profit. When shares is sold at market value, which is greater than book value or face value, then the shares is at profit. So we are comparing with book value, also with face value, because sometimes we compare with book value also. At par, when market value is equal to the face value, then the share is at par. At discount, when market value is less than book value, then the share is at discount. Company is in loss. What do we mean by brokerage? Brokerage, or the commission, is the money you pay to the agent or broker who provides a service to you while buying and selling the shares. If you have good knowledge of share market, you can bypass the agent broker in between. As a result, you can save the brokerage money. This type of investment is called direct investment. So right now we are covering all the theory part. In the end, we will take examples. So what do you mean by dividend? Dividend, it's a kind of profit we get in shares. So it's a profit in share. We don't say profit in share market. We say we are getting dividend or bonus shares in form of profit. So let's define what is dividend. Dividend is a part of a company's profit, a net profit that is paid to the people who owns shares in it. Dividends are normally declared as percentages, that is 90%, 160%, and some companies, good companies, they declare their dividends like 900%. Dividend percentage is always calculated on face value. It's not calculated on market value. Suppose face value is rupees 10 of one share and dividend declared is 900%. Then on one share you will rupees 900% of rupees 10. That is only 90 rupees you will get. We never calculate dividend on market value. It is calculated on face value. Note the statement 25% at 135 or 135 rupees means a share with face value 100 has market value 135 rupees and it gives dividend at 25%. So default, we are going to consider that in this statement, my face value is rupees 100. This percentage is dividend and this is market value. And it fetches dividend 25%. So what we have here now, what are the different types of shares issued in India? Here are the different types of shares. Equity shares. These are shares that are traded on the stock exchange and are also called ordinary shares. The equity shareholders are entitled to dividends, voting rights, and all other ordinary benefits that shareholders have. preference shares. These shares give shareholders the right to dividends ahead to the equity shareholders. So it says that preferential shareholders will get first preference while receiving profit or dividend. In preference share, a fixed dividend is declared to every year. This is not fixed in equity share. So this statement says that if company is in loss, anyhow that company have to give that fixed amount of dividend to preferential shareholders. And it could happen that if company is in loss, equity shareholder will not be given dividend. But for preferential shareholder, they have to give. So preferential shareholders do not have voting rights. So we have reached to numerical session. So first question is, a sum of money got by selling shares of rupees 1500 in 10% at rupees 135. Was this deposited in a bank at 8%? Which investment gives a better return? So the first statement, or the first type of investment, so I'm investing 1500 in shares, which gives me 10% of dividend. So that's my profit in first type of. And if that was deposited in a bank at 8% per annum, which investment will be better for me? Here 10% at rupees 135 means share with face value rupees 100 and market value rupees 135 gives dividend 10% of face value. Here the shares are out for selling, implies market value is rupees 135 for one share. So we bought n shares for total rupees 1500. Here face value of one share is 100 will be taken as cost of one share while purchasing in past. And total money paid was 1500. So number of shares purchased is 1500 divided by cost of one share. So I had bought 15 shares. If you sell these 15 shares in the market at this cost, so money received will be 15 into 135, so 2025 rupees. So dividend is interest money received on all 15 shares. 10% at face value on one share, that is 10% of 100 rupees, which is nothing but rupees 10 on one share. So 10% of 100 is rupees 10. So 10% means this. It's 100 and cancel, so rupees 10. So total interest or dividend generated on 15 share is 15 into 10, so 150 rupees. So this is the profit I am getting when I invest in 15 shares. Okay, so this much money is received after selling, and on those many shares I will get this interest. So now suppose if I keep this money in a bank for 1 year at this rate, 8% per annum interest, then how much interest I will generate? So interest generated is that's a simple interest. So principal amount into rate into time upon 100. So this is the principal amount, this is rate for 1 year. So total interest I'm going to generate in 1 year is 162 rupees, which is greater than this interest. So investing in bank, giving 8% per annum, gives more interest. So let's take second question. Sum of rupees 1350 was invested in 6% share at 87 rupees. When it rose to rupees 91, all the shares were sold. In the meanwhile, dividend was received. For purchasing, the brokerage was 3%, and while selling it was 2%. So in this question we have brokerage. This much brokerage I am paying while buying, and while selling 2%. What is the total gain or loss in the whole transaction? So I think question is clear to everyone. Let's begin the solution. So we will discuss the solution in two parts: purchasing part and the second is selling part. So while purchasing, just wait, I'll zoom out. Okay. Yes. So while purchasing, the total money I have paid is 1350 rupees, and 6% at 87 rupees means cost of one share. So this is while purchasing. This is happening under while purchasing. So this was the cost when I was buying those shares. So cost of one share is rupees 87, face value default is rupees 100, dividend is 6% on face value. So what is 6% of face value? Means 100. So 6 rupees 6. So rupees 6 on one share. And what it says, 3% brokerage I am giving to the broker. So on cost paid. So for one share, if I'm buying one share, how much money I'm paying to buy one share? It's not 87 rupees, because there is a person in between who is helping me to buy those shares. So he's taking his commission. So at 3%. So 3% of 87 rupees. So brokerage of one share is 3% of 3% of 3% of 87. How to calculate this? 3 upon 100 into 87, and just calculate this. You will get the brokerage amount is 2 rupees and 61 paisa. So on every share that guy is taking commission 2 rupees and 61 paisa. So total cost paid to buy one share is 87 rupees plus this much amount. So total 89 rupees 61 paisa. Now, but it says that I have invested or paid total amount this much. One share cost me this much. So how many shares I have bought? I have bought, divide this. So it comes 15.0.65. And shares are not in decimals. So it is always an integral value. So I will take it as approximately 15 shares. Obviously, I'll take 15 shares because it's closer to 15. Now let's read while selling part. So there are total 15 shares I have bought. Now I want to sell those 15 shares. While selling, market value is rupees 91. Selling price of one share is 91. And while selling, that broker will take his money from every share. So one share I'll get rupees. So I have to give 2% of 91 is rupees 1, and 82 paisa. So that person is taking this much amount out of 99. So money received after selling one share is 91 minus 1.82, so 89.18 rupees. So total money received by selling 15 shares is 15 into this one amount, this much. So 1337.7 rupees. Now, so right now I have, after selling, I have this much money in my pocket. Okay. Now what about dividend? I also received dividend. So dividend received on 15 share. So this statement says that 6 rupees on every on one share. So but I have 15 shares. So how much money I will get as dividend? Rupees 90. So total money after selling is this plus rupees 90. So 1427. So add it, 7 paisa. So money paid to buy 15 share is 1350 rupees. Money received after selling 15 shares is 14,027 rupees and 7 paisa. So total gain, just subtract these two numbers. So this is your gain. So let's take the third question. A person finds that if he invests his money in 15% stock or shares, 15% stock at 225, his income will be 270 greater than if he invested in 22% stock at 375 rupees. Find the sum invested. So we don't know how much money he is investing. So let the sum invested be rupees X. So I think I can zoom in now. Okay. So the money invested is rupees X. So I have table mentioning that, table comparing the two investment. First investment is 15% at 225 and the second is 22 at 375. So what happens in this type of investment? Face value of one share is default. We are taking 100 rupees. Dividend on one share is 15 rupees. 15% of face value. Face value is 100, so 15 rupees. Market value or the cost of one share is 225 rupees for one share. So profit. So what I have written. So this is the profit. So this is the profit on one share. And one share costs me 225 rupees. So if I invest 225 rupees to buy one share, my profit will be rupees 15. So this is the direct thing I am writing. So if I invest rupees 225, I will get this much interest. But I am investing how much money? I'm investing rupees X. So how much profit I will get? P1. So let's calculate it. So just cross multiply this with this and this is multiplied to this. So 225 into P1 equal to X into 15, 15X. So this 225 will move into the denominator. So we will get this. So I think this is clear to everyone. Okay, now come to this type of investment, 22% at 375 rupees. face value 100, dividend, this is the profit I will get if I buy one share, and one share will cost me this much amount. So the same statement, so just do the cross multiplication, you will get this. Now the question says that according to the question, if money is invested in first plan, then the profit is 270 rupees greater than the second plan. So what do you think? So this is greater amount than this thing. So P1 minus P2, the difference will be 270 rupees. So I have written it. So P1 is 15x upon 225 minus P2 is 22x upon 375 is equal to 270 rupees. So what I've done, I have taken x common here, and this thing is in bracket. Now this thing cancels with 15. This cancels with 15. 15 into 15 is, so I have written 1 upon 15 minus 22 upon 375 equal to 270. Now I need to take LCM, so multiply this by 25 and multiply this by 25. Why? Because 15 into 25 is 375. So this is 375, this is 375. So this is the step I have written. LCM, it's easier to take LCM now. LCM is 375. Okay, so this step is x into x into 25 minus 22 is 3 upon 375 equal to 270. So this 375 will get multiplied on the other side. So that's what I have written here, 270 into 375, and this 3 will move into the denominator. So here, so this is what I get after simplification, and x is 33,750. So amount invested is 33,750 rupees. A man invested rupees 2,000 in 10% share at 125 of a company A, and rupees 2,400 in 15% share at 120 of a company B. Which investment is more profitable and why? So again we have a comparison here, company A and company B. Amount invested is rupees 2,000, and it says that 10% share at 125. So market value of one share is 125 and the profit on one share is rupees 10. Why 10? Because face value is rupees 100 and 10% of 100 is rupees 10. If he invest rupees 125 for one share, he will get profit rupees 10. So profit on rupees 200 is this. How to get this statement? We have seen in previous question. So it is like if on rupees 125 rupees, the profit is rupees 10, and if he get rupees 2,000 to invest, how much profit he will get? Say x. How to find this? Cross multiply. So x into 125 is equal to 2,000 into 100 into 10, and this 125 moves into the denominator. So this is what I have written here. Solve this, you will get 166.67 paisa. Same thing we have to see for company B. Amount invested is rupees 2,400, and the details are 15% share at 120. So So market value or the cost is 120 rupees and the profit, the dividend is rupees 15. So if you invest rupees 120, you will get 15 rupees as a profit. So how much money, how much profit you will get if you invest this much? Same thing, rupees 300. Just look at the profit received by these two companies. Which one is better? Investment in company B is better because you know the reason. Note the answer to such questions. To answer such comparable questions, we must use formula of rate of return. So in this solution, I have not used rate of return. So let's see what is rate of return. Formula for rate of return is dividend received on one share, means your profit on one share. This is profit on one share, divided by the cost you are paying to buy that one share into 100. That's very obvious formula how to find the profit percentage. Okay, so this is the rate of return of company A. So how much dividend I am getting on one share? Rupees 10. How much money I am spending to buy one share is 125 into 100. So 8% is the rate of return. Whereas rate of return for company B, how much dividend for one share? 15. Cost of one share? 120. So that's 12.5%. So obviously the rate of return is greater for company B. So I will opt company B to invest in their shares. Let's see this question. An investor bought 300 shares of face value rupees 10 of a company at market price 180. The company declares a dividend of 40% on the shares. After receiving the dividend, he sold all the shares at rupees 200. If his gain or loss, find his gain or loss in the entire deal. The brokerage rate is 0.3%. So it's not mentioned that this brokerage is taken while selling or while purchasing. So default, I will take this brokerage on both transaction, while selling and while purchasing. So the face value is rupees 10. In this question they have given face value is 10. Now while purchasing, the details are market value of one share is rupees 180, number of shares bought 300. So what is the cost I am supposed to pay to buy 300 shares? 300 into 180, 54,000. So this is the total amount I am supposed to pay, but there is a brokerage. Either you can apply brokerage on one share or apply on the complete transaction. So brokerage paid on purchase is 0.3% of whole deal. So this is the whole amount of the whole deal, and 0.3% I am supposed to give as a brokerage. So 0.3 of 54,000, it comes 162 rupees. So the total cost paid, so I have to pay this much extra from my pocket. So 54,000 plus 162. So this is the money paid by me to buy 300 shares. So this and then let's read while selling. Market value of one share is rupees 200. While selling, it becomes rupees 200. Money to be received after selling 300 shares is 60,000. So I am supposed to get 60,000, but there is a brokerage. He will take his money from this 60,000 and then give the remaining amount to me. Brokerage to be paid on selling is 0.3%. So 0.3% of 600, it comes 180 rupees. So that will be subtracted from the 60,000 and it is 59,820 rupees. Now So this thing is in my pocket. And how much I have invested? 54,162. And this is 59. Obviously, I am in profit. But don't forget to add dividend. I also received dividend at 40% of face value. Unfortunately, face value is rupees 10. Because dividend will be less. So 40% of face value is rupees 10. It is 4 rupees on one share. So what is the amount on 300 shares? 1200 rupees. So how much amount I have in my pocket? So this is in my pocket and this is also in my pocket. So total money received is 59,820 plus 1200, 61,020 rupees. So there is a profit in this transaction. How to get that profit amount? Amount received minus amount invested. So this is the profit amount. So let's take this question. A man purchased shares of face value of rupees 3,200, and by investing rupees 400, let's read it again. A man purchased shares of face value of rupees 3,200 by investing 4,000. What was the market price of share? If the shares fetched 6% dividend, what percentage of dividend will he get on his investment? So let's go through the solution. Let number of shares purchased be n. We always take face value rupees 100 or rupees 10. So in this case, I am taking rupees 100. So if you take 10, your answer will be accordingly to the 10. So this will be 12.5 if you take 10. Okay. So I'm taking 100. Face value of n share is 100 into n. But question says it is 3,200. So obviously number of shares is 32 shares I have bought. Now money paid while purchasing 32 shares, that is market value, is 4,000. So what is the market value of one share? So for 32 you have paid 4,000. So what is the price of one share? So just divide 4,000 by 32, you will get 125 rupees. Okay. So what I've said with this, if you take 10, okay, let's leave this. If you take face value 10, the numbers will be changed accordingly. So I've said 12.5. Let's just forget that. Okay. So market value of one share is 125. Dividend on one share is 6% of face value. This will be changed if you take face value rupees 10. So what is the dividend on one share? 6% of face value. So 6 upon 100 into 100, so rupees 6. So this is the dividend. Dividend on 32 shares. On one share you are getting 6 rupees. Then on 32 shares you will get 32 into 6. 192 rupees is your profit. So if he invests 4,000 rupees, the profit is 192. How to convert this into percentage? So just divide this by total money invested. So 192 divided by 4,000 into 100 is 4.8. or you can do this by dividend on one share is rupees 6 divided by cost of one share is 125 into 100, and it will come 4.8%. It's one and the same thing. So let's confirm this. 6 divided by 125, yes, into 100 is 4.8. So whether you can do this formula for one share or the total investment, or the total dividend and the total invested amount. So let's see this question. A person holds 300 shares of rupees 10 each at 15 rupees. So this statement says that 300 shares that costs him 15 rupees, and this rupees 10 is face value. Okay. The company issues bonus share. What is bonus shares here? Bonus shares is kind of profit of the shareholders. So dividend and bonus shares are the two types of profit in share market. So a person holds 300 shares of rupees 10 each at rupees 15. The company issues bonus shares in the ratio 3:5. The company declared a dividend of 25% on the charged capital. What is the average rate of return on his investment? So again, we have to find the rate of returns. So face value is rupees 10. So it's written here. So 300 shares of rupees 10, and this is the market value. So number of shares purchased is 300. Company declares bonus shares as a profit in 3:5, means 3, that is 3 shares, extra shares. So these are the bonus shares on every 5 shares held by that person. So if I have 10 shares, how many bonus shares I'm going to have? 6. So on every bunch of 5, so suppose this bunch is having 1, 2, 3, 4 and 5. So 1, 2, 3, 4 and 5. So for this 5 shares I have 3 more shares, and for this 5 I have 3 more bonus shares. So total 6. So it goes into a bunch of 5 shares. So in total I have 300 shares. So in 300 shares there are 60 bunches. Each bunch contains 5 shares. So how many bonus share I have? On every 5 shares we get extra 3 shares as bonus shares. Total number of bonus shares 3 into 60, 180 bonus shares. Total number of shares with that person now is 300. He bought 300 and he get 180 extra. So 300 plus 180 is 480 shares. Dividend declared is 25% on face value. Face value is rupees 10. So 25% of 10 is 25 upon 100 into 10, 2.5. 2 rupees and 50 paisa on one share. But how many shares he has right now? He have 400, and the total dividend received on 480 shares is 480 into 2.5. So 1200 rupees. So this is the profit. So this is the profit earned by that person by investing in 300 shares. But how much money he spent to buy those 300 shares? So money spent to buy 300 shares, and what was the cost of one share? Rupees 15. So 300 into 15. So he spent 4,500 from his pocket and gets this profit. And it's easy to convert this profit into profit percent. So this is the profit amount, this is the total money invested into 100, you will get 26%. So 26% is the rate of return for that person. And with this lecture, I think this is 55 minutes lecture on shares and dividends. It's more than sufficient to cover all the topics from unit 2. Okay, so with this, unit 2 is also finished. So I have finished unit 2 in one lecture. So it's pretty lengthy lecture, but okay. So I have taken one lecture on unit 2, shares and dividend. So thank you so much.